Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for February 2018. So this will be the last time I do the stock market week recaps for the month publicly on YouTube. I'm going to go ahead and begin to transform my Patreon site into a private area where I talk about my buys, my sells, why I bought it, why I sold it. I'm not going to be as invested in the stock market kind of going forward. As you know, I'm moving into real estate. I'm working with a real estate investor locally to buy in 4 areas within my state. I'm also working with a turnkey provider out of state in order to buy rental in state and out of state. That way I can get some experience in both areas. And I'm going to be putting my money into a different financial vehicle, investment vehicle, which is real estate. And I've talked about that and my criteria and what I'm kind of looking for in one of my past videos. If you'd like, check that video out. It's in the top right corner. What I'm looking for in real estate, I think, is what I kind of discussed, and I went over a house in my state. So over on Patreon, if you guys would like to support the content, have access to my end of the month portfolios, what I'm buying and selling, just kind of talking about in general, more in the private area, talking about my investments, not just in the stock market, but also as I begin to make offers on houses and get accepted. I'm going to go ahead and post the houses, not the addresses, but just kind of physical the pictures, and then make sort of like a blog style kind of recordings, and some of those will probably be over on YouTube as well. But those will be tailored more for Patreon, more of a private group investing community. So that's why I'm trying to, going to be working to fix up both my website, Patreon, and have that content on there. So last time I made my video on real estate and why I'm checking it out, I had the address listed, and that house got bought up in 3 days since posting the video. There's already a pending sale. So I'm not going to be covering houses that I think are great buys that I would like to invest in without having made an offer and been accepted, because then I'm going to get bought out, and that's going to be terrible, because that was a great investment I could have easily fixed up for $60,000 and rented it out for $900 and built up cash flow and equity very quickly. So if you guys would like to support the channel and have access to all that, head over to patreon.com. The link is in the description below. So let's go ahead and get into our end of the month recap for February 2018. Very briefly, January 2018, we went up 3.2% in the month of January. That was very nice. Our cash managed account was sitting at $61,194 invested, and of course that was an increase of 3.38%. Now, February, my portfolio looks like it fell down around 7.96% right now. My cash managed account, my non-retirement account, is sitting at around $5,600. So that is a difference of 8.99%. So that's I had $5,500, I believe, invested. I think I have some money on the side. So that's all. Yeah, you can see the balance here on January 1st. Here, the balance here on February 1st was basically 61,200. I'm now currently sitting at 55,929. That's a difference of 9%. I went down roughly $5,500 this month and made $213.23 in dividends. So what changed in my portfolio? Well, taking a look at last month, I decided I want to jump out of my real estate investment trusts and my utility companies. These were heavily, they were leveraged with debt, which with rising interest rates, we heard from the Fed chairman on Tuesday, Mr. Powell, that he's going to be increasing, the Fed's looking to increase interest rates 3 to 4 times in 2018. Each one of those spikes is going to increase inflation. With rising inflation, increase price in goods, increase price in houses, increase prices in debt in order to take out debt. When I got my loan in 2013, I got a VA loan, but I got a 1.75% loan. Right now, if you get a VA loan, you're going to get a 3.75% or around a 4% loan. When I went to talk with get approved for a loan for like a rental or an investment property, they're looking at rates right around 4 to 4.25%. So they said cash is gold right now. If you want to buy real estate, you have to buy it with cash, and that's going to lock it down very quickly. So I'm going to be using some of my money in my investment portfolios to begin investing in real estate. That's going to be all coming up on YouTube. So I did sell out of my Edison International at a loss. I sold out of Entertainment Properties Trust at a loss, and I sold out of Realty Income at a loss. So I sold out 3 stocks at a loss because these were all in debt. They were going down drastically with rising interest rates. I don't see these ones recovering over the next year. I didn't want to bleed out on the money. I hate selling stocks at a loss, and over the long term, I'm 100% sure that these stocks would recover in the next 3 to 5 years, 10 years. But because I'm moving into a different investment vehicle, I wanted to downsize my portfolio. So I did sell many of my stocks at a gain. You can see a lot of green here. I was up nearly 60% in AbbVie, 21% in Colgate and such. So over on my portfolio now, I sold off all my winners, sold off 3 of my losers. I'm now only invested heavily in Apple. I own 116 shares of Apple. I bought them at $170 is the average cost there, I believe. And I also bought UPRO, which is a leveraged S&P 500. I don't recommend anyone do this. I'm buying in and averaging down. It's going to be balancing between my Apple and my S&P 500. Apple is used as a counterbalance to the S&P 500, and I'm going to be I have about $20,000 between these 2 investments, so $20,000 in UPRO, $20,000 in Apple. But as UPRO falls, I'm going to be adding money in because as these corrections take place, there's more upside to downside right now. We haven't fully recovered in the S&P 500. We did see the Nasdaq recover the loss. I believe the S&P 500 should recover the loss in the next few months, and then kind of continue growing unless Trump gets hit up with an indictment. So let's go ahead and talk there. So Apple is my biggest investment right now, right behind or right with the S&P 500, and Apple actually got it at a much better price down inside my IRA. So we're going to be covering that here next. Roth IRA stayed exactly the same. Roth IRA, it's a long-term investment vehicle. I'm not looking to sell anything out of it. These stocks were in there for the long term, and they were mostly negative. The only reason I jumped out of my EPR, and my Edison International was because they were inside my cash managed account, my taxable account. My real estate investment trusts were getting hammered with taxes at my 25% tax bracket. I don't want them to get taxed at 25%. I want them to get taxed as qualified dividends, so I decided to sell them out of my cash managed account. Now they're inside my Roth IRA, and those dividends that I get paid out there, I don't have to worry about paying taxes on them, so I'm going to go ahead and leave them sitting there. Now my Roth IRA, it went down around 580, but with dividends, it is looking, dividends, and this portfolio makes around $600 every year. So I may be down 580 in February. As I continue to kind of progress over the year, I do believe it'll recover that 5% loss in my Roth IRA, and I'm not looking to really sell anything. CenturyLinks is a great buy and hold. I think it's going to continue to go up into the $28 range. Edison International, I don't like it. It's a utility company, but I'm down 14%. I already sold out of it in my cash managed account, which had more money, I believe, invested in the stock. So I'm going to go ahead and keep Edison International in this portfolio for now. Ford, Kimberly-Clark, Realty Income, AT&T, WP Carey, they're all good stocks for the long term. They've all had dividends paying out for more than 10 years besides Ford and CenturyLink, but I'm going to continue to hold those inside my Roth IRA. Now my IRA, when I initially rolled over my 401k, I bought ticker symbol VOO, which is the S&P 500. I decided that was not what I wanted to do because I was already invested in UPRO, so I sold out of those positions. I sold out of them at a loss. I didn't even see that. I was just kind of trigger happy. I want to jump into Apple. I see it at 162. I jumped out of VU, jumped into Apple. Apple's up 9.66% since I purchased it, and that's all I'm going to have inside my IRA. Apple is such a great long-term buy and hold. Their services is growing very quickly, double-digit growth, and the way that they're kind of progressing and moving away from more of iPad, iPhones, MacBooks and stuff, and becoming more services, that's going to allow them to have a more predictable net income and revenue and earnings every quarter. It's going to be more predictable and allow faster growth in the future. So I'm going to go continue to hold my Apple shares inside my IRA, continue to hold my Apple shares inside my non-retirement account for now, and if I do need to liquidate it in order to purchase the house, then I will do that. So total, I'm sitting at right around $7,400, $74,000 versus at the end of January I had $80,000. So I am down right around $5,000, a little more than $5,000, which that's fine. That's understandable. We went through a correction. Actually, if I had held on to my stocks and they would have depreciated below, I'd actually be sitting a little bit below 74,331. I think I'd be sitting right around 72,000 when I looked at what my portfolio is at on my Google cheat sheets. So by selling off some of my winners, I was able to keep those capital gains, and I will have to I'll have to pay taxes on them in 2018, but I am up overall total higher than I would be if I continue to hold these positions, and I moved into less positions that are much more manageable to look at their 10Ks, sit in their conference calls, listen to them more, because when I had a portfolio of 20 stocks and I had 3 conference calls coming up, earnings reports for 4 different stocks in one day, I didn't, it didn't mean anything to me. I could have AT&T and Verizon and some other stocks reporting on the same day, and I may just jump into one of those. So I decided I wanted to focus my portfolio more on 1, 2, 3 stocks or so, and be more laser focused. That way I can actually sit in on those conference calls, I can listen to their earnings report, get better at going over those quarterly reports, and that'll allow me to just be more focused on specific stocks rather than having a diversified portfolio where I have no idea what Colgate is doing and why they were bleeding out, or why Entertainment Properties Trust was doing so poorly. It could have been due to rising interest rates. It could have been due to something they were doing in their company. But without having to go in there and onesie twosie all these 20 different stocks, I wouldn't know. So that was the reason for kind of losing that diversification inside my portfolio. So Apple, of course, was my biggest winner, up 9.66% inside my IRA. The dividends I was paid out for February totaled $228.30. I made $213.23 in my cash managed account. I made $15.07 in my Roth IRA for that total of $228. Of course, my highest one was AT&T at $47.50. That is basically it. So if you guys are sitting here watching this video, I won't make this public on my website. Again, this video will be going public over on YouTube, but going forward, all the posts, I'll see if I can set it up so the posts will be able to be read by those on Patreon, and of course you'll get access to this video going forward for the March review over on Patreon. And I'm going to be revamping that website. If you guys do have any comments in the section, if you guys have any comments about anything coming up, let me know in the comment section below. I'm always looking to listen to all of my subscribers, because you guys are what I create all the content for, talking about my portfolio, my investment journey, why I'm moving from stock market over to real estate investments. And I believe I'm trying to build to a point where I could create financial freedom and find my freedom number, and I'm really working to push that very hard in the next 5 to 10 years. Just be completely, financially free, or I don't have to work at my current work. I can do YouTube, I can work more at real estate, I I think I would always like my job. I do networking. I'm an engineer. So I like what I do. I really enjoy it. I love going out there, visiting different branches, replacing equipment, setting up different branches and equipment, configuring routers, switches, firewalls. It's interesting to me. That's my jam. I'm technology. I like it, all that. So I like the money. Of course, the money is great because I'm able to use that money to funnel into my investments to purchase real estate, and that's gonna be able to help me retire by 40, I believe. By 40, I could see myself and my family easily being retired if we wanted to, and just kind of continue building up our real estate, end. So that's all coming up in the future. So again, if you have enjoyed the content today, go ahead, like, comment, subscribe, check me out over on Patreon. If you have any suggestions for anything coming up, let me know. I always listen to you guys. I always reply. Of course, as a friendly disclaimer, I am not a financial advisor or tax professional. The information provided in this video is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them and using other financial vehicles in order to further myself in my financial journey. Thank you guys so much for tuning in. I will see you next time. Bye-bye.